Welcome at a new episode of the Market Reporters, and unfortunately last week we were not in the air, and so we are happy that we are back. Hopefully you are also happy because we are in Malaga and we had a lot of problems with the rain and our studio had some water issues. That is almost resolved, so we are still in a different setting. But we are happy that we are back, and there is a lot going on in the markets, there's a lot going on in the world. And today we a lot of negative things we wanted to talk about, some positive, and I think that the topic we were going to talk about is quite positive. Nvidia came with their quarterly figures, correct, Wednesday after market. And Nvidia is nowadays the most valuable company on the stock market, $3,600 billion. So it's an important one, and I think it's almost in this year it's almost, I think, 20% of the gains of the S&P 500. So of the 500 biggest companies is because of Nvidia. So it is, if you like it or not, it is a really important company, and you can say that Nvidia is the barometer of the tech sector, because the most important clients of Nvidia are Meta, are Microsoft, are Alphabet. So if it's going well with Nvidia, that means that those company orders a lot of chips, they need it, so they're probably also increasing. So the whole world is looking at the tech sector with the basis and Nvidia. The figures were good, probably you know. What is good? Good is, of course, an increasement, but that's normally nowadays with Nvidia, but also better than expected. The revenues were over the fiscal quarter 3 of 2025, because they're a little bit ahead of us. That was $35 billion, and that was $2 billion more than expected. And revenues were $19 billion and also more than expected. And people get used to it. But if you have a company with $35 billion, with 35, and a profit of 19, that's really a high margin. They have a profit, they have a cross margin for 75%, also in line with the expectations, still really high. Of course, is that because they can maintain the high prices per product, but there is a newcomer around, not a newcomer, but and competitor is getting more and more close. And you're going to talk about the competitor.
Yes, I'm going to talk about the competitor. You want me to do it now?
No, I want to finish it.
Finish.
Thank you so much, Martin. And the expectations of the next 3 months were also slightly higher, because they thought in next quarter the revenues will be 37 billion, but it is Nvidia said it will be 37.5 probably, so slightly better. What did the stock? After market, so after Wednesday when they announced the figures, it went slightly down, a little bit more than 2%, but we are now Thursday, we're still in the trading hours, and it's 4 or 5% up. So the market also thought that the figures were really good. Year to year, 94% more revenues and 109% more profit. So we get used to it. If you look at the earnings per share, that will be around $2.89, and with a price of 150, so one share costs around 150, you have a price earnings of 51. That's quite high. But investors buy something for the future. So how is the future looking? So again, 2025 is the existing year, and it is estimated that in 2029 the profit per share will be around $5.50. So that is a price earning of 27, and that is not that expensive.
No, that's not.
And if you look, we will probably put the chart in the screen, and if you look at the expected growth in revenues, then you see the last 2 years, or 2027, 2028, 2029, that is not that steep anymore. So I think the estimations are already quite conservative. So if they will be better than expected, then there is a lot of room for that company. Now, okay, what's the underlying driver? Nvidia has a new chip, a new it's the previous one was the Hopper, the GH200, and the one that they have now on the market is the Blackwell chip. There were some rumors that the chip had some issues, and mainly that it could be overheating when it was placed in a computer. The CEO and the CFO said, no, that are not really huge problems. They already delivered 13,000 of those chips in the last quarter. That's more than expected. And the pipeline is already full for the next year. And Microsoft and Google Meta, they all wanted to be the first or one of the first. SoftBank was the first that has it already in use. And what is the price of one Blackwell chip? It is around $40,000.
Insane amount of money.
And I checked, I did my homework, I went on my eBay account, and I looked if I could find one. No, I couldn't find one. I looked for the previous one, so the Hopper GH200, and I sold them for $40,000. You can buy them. I don't know. I didn't look at the second hand or the new, but this is what they are doing. So I think that happy to see that the barometer was really good, better than expected, and I think that with the new chip. And everybody wants to have the new chips because they have to perform more and more for us.
And they need to be renewed also. We talked about it in our seminars. They need to renew the chips for the data centers every 2 years. So it's not something that's, okay, we buy it and you got it. Now you got to keep renewing it because it burns down, right?
Exactly. So I think good figures in the outlook, quite interesting.
Absolutely.
But a competitor.
Yes. So when you do the investigations online and whatever source you're using and you talk about who is Nvidia's biggest competitor, most of the sources will tell you that is AMD. And AMD, of course, is a company that we know because they make chips mainly for laptops in the past, for gaming purposes, for PlayStation, Xbox, for Microsoft, etc. But they're really investing very, very heavily and have been investing in also developing chips that are capable of doing what the Nvidia chips are doing. And they're doing that quite well. They are selling more and more and more. They're trying to find a place. Of course, the company is much smaller than Nvidia. The company is worth about 230 billion, which is not small, but it's much smaller than of course Nvidia. And it might just be that they managed to find some, because Nvidia, how quickly it went, it can also happen to somebody else, of course. If you find the right trick to say so, and the magic can happen. Just to give you some insight in the data, the stock is trading at the moment at $137. It came down quite heavily from, if we go back to 2024, the beginning of this year, it was about 200. So in comparison to Nvidia, it went like that. AMD went like that. That of course has a reason. You can imagine what that reason might be. That is mainly because of the high investment. But what is funny to see that this quarter, so they presented their figures on the 29th of October, that their operating income, so the income that they are generating, is up 223%. Of course, how much you make out of that, that is then of course another thing, and it was up about 30%, but the income itself is growing quite heavily. For the fundamental investor, I think it's always what Casper also did. You look at what is the price earnings at the moment and what will it be in the future. Well, at this moment, they're making about $1.5 per share. So you pay about 100 times the earnings.
What's the price?
The price of the stock is 137.
137, yeah.
So you pay a lot of times the earnings, which in general is not, it's not so interesting, you might think. But if you look at the expectations of the analysts, they have an expected earnings per share for the year 2008 of about 12. So if that comes out, then of course, obviously you're talking about 10 times the earning. And that is also what that's 2028. So that's in 4 or 5 years, 4 years.
Oh, yeah.
They're talking about earnings per share of $10 to $12 on average. So that is, of course, something that is, if they manage to get there, if they manage to get these earnings where they expect it to be, then you're talking about 10 times the earnings. And then all of a sudden it's a really cheap stock. And what is also interesting to look at is sometimes the price to book ratio. It's not something that mainstream investors often look at, especially if you're a retail investor. It's a difficult to understand ratio. Maybe price earnings is easier. The price to book ratio, basically, what is important, if it's below 1, you're buying a cheap stock. Okay? So you could say you're buying a cheap stock. If it's above 1, you're buying a stock that is overrated, overvalued. But if it's far above 1, then you're talking about a stock of which the market in general is extremely positive. Now, if we look at AMD, they are at the moment at a price to book of 4. So you say, I avoid it, but it also means that the price in the future, there is a lot of expectation, a lot of magic possible in this stock, I think. So all in all, the figures from October, they were really good. From a fundamentals perspective, you see that there are quite big expectations. You could say that. Will they manage to get up to the same level of Nvidia? Well, I think it's going to be tough. Of course, Nvidia has the whole ecosystem. They have their place in the market. To get next to Goliath, I think you need to do a lot, put in a lot of effort. So it's going to be tough. And of course, the investment in the research and development needs to pay out. And that, of course, now at this moment is a lot of cost. And that needs to hopefully bring revenues.
And this is, of course, the semiconductors sector. And if you believe in it and you don't have an investment in it and you think, okay, I want to buy a basket, there is a really nice and good ETF, for example, from Vanek. It's a semiconductors ETF. Yeah. And they invest in all those because there are more in those companies. Nvidia has their biggest position, I think 10% of everything, and then AMD and TMC is also in there. So if you don't want to have the risk of one company, you can buy baskets. Because if you want to be, we always say you want to be in a growing sector, and this sector is still growing. Yeah. So then in a growing sector, it's much more easy for the company to grow also.
100% true. Thank you for watching, and we'll see you again next week.